Welcome to the Global Commerce Academy, your destination for 100% free CMA USA coaching. In this lecture, we cover Chapter 5, Segregation of Duties, SoD, from Section E, Internal Controls, part of the CMA USA Part 1, 2025 syllabus. Let's get right to it. Your business's money needs protection. You wouldn't leave your house unlocked, so why leave your company's finances exposed? The answer: segregation of duties, or SoD. It's simple. Never give one person all the keys to your financial kingdom. When one person controls too much, the risk of fraud or mistakes skyrockets. SoD splits up key financial tasks among different people. It's not about distrust. It's about protecting everyone: owners, employees, and the business itself. With SoD, fraud requires collusion, making it much harder to pull off and easier to catch. Whether you're a student, a business owner, or part of a big corporation, this is essential knowledge. SoD isn't just for passing exams. It's about keeping your money safe and your records reliable. We'll break down what SoD means, why it matters, and how to use it. Get ready to take control. Your money deserves more than one lock. Let's see how. Here's a true story, a cautionary tale. Fintrax Solutions, a fast-growing tech firm, trusted one employee, Raj, with too much responsibility. Raj could create vendors, approve invoices, and make payments, all by himself. No one checked his work. Over 2 years, Raj created a fake company, sent fake invoices, approved them, and paid himself. No one noticed because no one else was involved. By the time an audit caught it, Raj had stolen over 35 lakh rupees. The company was devastated, financially and emotionally. All of this could have been prevented with segregation of duties. If someone else had to approve vendors or payments, Raj's scheme would have failed. One person with all the power is a recipe for disaster. SoD isn't just theory, it's real-world protection. Don't let your business become the next Fintrax. Separate duties, and you separate risk. Learn from their mistake. Protect your business. One simple control could have saved them. Make sure it saves you. So, what is SoD? It's the rule that no single person controls every part of a financial transaction. Divide critical tasks, like entering, approving, and paying invoices, among different people. This creates built-in checks and balances. SoD stops one person from both committing and hiding fraud. It also catches honest mistakes. Fresh eyes spot errors. Think of SoD as a protective wall around your assets. Each person holds a brick. No one can break through alone. It forces teamwork, creates transparency, and makes fraud or errors much harder to slip through. SoD is a foundation of good governance and strong internal controls. It's how you stay in control of your money. Don't skip it. To master SoD, know the 4 key roles in any transaction: authorization, custody, recording, and reconciliation. Authorization: approving the transaction, giving the green light. Custody: physically handling the asset, cash, inventory, or access to accounts. Recording: entering the transaction into the books, keeping the official record. Reconciliation: independently checking that records and reality match. Never let one person handle more than one of these pillars. For example, the person who approves a payment shouldn't also make it or record it. The person with access to cash shouldn't keep the records. The bookkeeper shouldn't approve transactions. Reconciliation should be done by someone not involved in the other steps. This separation is your safety net. If one step fails, another catches the problem. It's a system designed to catch both fraud and mistakes. Assign these roles carefully. Keep your financial structure strong. Don't let your business collapse from weak controls. 4 pillars, 4 people. Simple, powerful, effective. That's SoD in action. Let's see SoD in action with a vendor payment. The accounts clerk, Priya, enters the invoice. Recording. The department manager, David, reviews and approves it. Authorization. Maria in finance processes the payment. Custody. Sam, who wasn't involved before, reconciles the bank statement. Reconciliation. Each person handles only their part. If Priya tries to pay a fake invoice, she can't. She lacks approval and payment access. If Maria tries to pay an unapproved invoice, the system blocks her. If David approves something odd, Sam will catch it during reconciliation. This chain of accountability protects your cash. 4 roles, 4 people, no single point of failure. That's how you keep your money safe. SoD isn't just theory, it's practical, everyday protection. Make it your standard. What if you're a small business with only a few people? Full SoD may not be possible, but you can still protect your money. Use compensating controls, extra checks to make up for limited staff. The owner should personally review and sign every check. Get the original bank statement directly from the bank. Review it yourself. Use accounting software to restrict permissions and flag unusual activity. Increase monitoring and reconciliation. Don't let the same person handle everything without oversight. Be an active, engaged owner. Even with a small team, you can create strong oversight. Know the risks and address them head-on. Compensating controls are your safety net. Protect your business, no matter its size. Smart oversight beats blind trust every time. For CMA exam takers, SoD is a must-know topic. Memorize the 4 functions: authorization, custody, recording, reconciliation. Expect scenario questions. Spot where duties are improperly combined. Know compensating controls for small businesses. Owner review, independent reconciliations, and increased supervision. Connect SoD to the COSO internal control framework. It's a key control activity. SoD ensures reliable reporting, efficient operations, and legal compliance. When you see a weak control scenario, recommend SoD as a solution. Explain the risk, then show how separating duties fixes it. This isn't just for the test, it's for real-world success. Master SoD, and you'll be a stronger, more ethical accountant. Make it your foundation. After the fraud, Fintrax solutions rebuilt with SoD at the core. They split duties. One clerk entered invoices, a manager approved them, a payment specialist processed payments, and a senior accountant reconciled the bank statements. No one person could control the whole process. Each role was clearly defined and separated. The system flagged anything unusual for review. This 4-way split stopped fraud in its tracks. It cost a bit more in staffing, but it saved the company. The lesson investing in SoD is investing in your business's survival. Don't wait for a crisis to make changes. Build strong controls now. Protect your assets, your reputation, and your future. SoD isn't just a policy, it's your financial fortress. Make it unbreakable. Here's the bottom line. Segregation of duties is essential. It's not optional or just nice to have. It's the best way to prevent fraud and errors. One person with too much power is a risk you can't afford. Divide key functions: authorization, custody, recording, reconciliation. For CMA students, this is your core knowledge. Know it, apply it, recommend it. For business owners, ask tough questions. Who approves? Who pays? Who records? Who checks? If the answer is the same person, fix it. Take control of your internal controls. Be smart, be safe, and most importantly, be in control. Your business depends on it. Don't leave your financial door unlocked.